It's Stuart here again. I hope you can hear me loud and clear. It's Thursday, the 27th of March, and we had another surprise to the markets yesterday, late in European time when, excuse me, just had a slice of toast and it's gone down the wrong way. President Trump, another 25% tariff this time on autos. Any parts coming into the United States, not made in the United States for the automotive industry, will be subject to 25% tariffs across the board. That's due to come in on the 3rd of April. Remember, the 2nd of April is his reciprocal tariff deal. Lots of negotiating stances on that one. Lots of countries trying to speak with the Americans about trying to reduce these, or what can we do about it? But it's a big headwind potentially for markets as we look forward. Yesterday we had the suspicion of it. Here was the Dow trade that we were long from on the 25th, the day before. It's a bit of a tentative one anyway, but we reversed quite dramatically on that. Today, we've just got the weekly claims and the GDP numbers just coming across the wires at the moment. So let's have a quick look at that. It says it's update, see what sort of movements we've got on that. Oh, sorry, I haven't updated this platform. GDP actually better than expected. Unemployment claims in line with expectations. 2.4% for the final reading of GDP. Backward looking, and it's also sort of negative, not negative, but it's a backward. It's the final revision of it. It is a tad higher, one tick higher at 2.4%. But again, weekly claims remain very strong at 224,000. Now, let me just check our calendar for the ongoing claims, which come to Thursday. I should just make me a wee bit smaller. There we might see that a wee bit bigger. So Thursday, the continuing claims. All right, Thursday, here we are. 1.56 million for continuing claims. So again, still strong numbers there. GDP one tick higher, up 2.4%. So that's relatively positive news. I'll try and take credit for that, obviously, as any politician would. Spending, real consumer spend down at 4%. That's again another sign of cracks potential in the market. A decline in wholesale inventories as well. Which again is not really surprising. You would have thought that might have been more front loaded, still big ahead of the tariffs, but that's a bit of a surprise. That coming in at 0.3 of 1%. It's not a real market moving piece of data, but you roll all that together and it's relatively positive for that US data today. So GDP better than expected. Jobs continuing to remain very strong, and the continuing claims sort of stepped down again to 1.85 million across the board. The 4-week average down at 224,000, as well as the first new claims this week at 224,000. So overall, that's a positive for the dollar. We had the DAX market on earlier, but just have a look at the two of the stock trades that we had open and had open for quite a while. We'd been long the S&P 500. Remember, we gapped up here on Mondays, or Sunday night. On Monday it's open. We got to our target here during Monday. We pulled the stop loss up as we started to move up. We just got to 4 hours, it's the daily time frame. We pulled the stop loss up again on Mondays. We got to our target, and we got stomped out yesterday as the rumor of there was going to be some more tariffs coming later in the day, which is in fact what happened. Obviously, trying to the political fallout of the raid on Yemen. Hesketh, the defense secretary, is still hanging on to his job, but most other situations he probably resigned by now. But whether Trump will actually sack him or not, it doesn't look like he's standing by him at the moment. But anyway, that was sort of a way of diverting attention away from that more tariff chatter, and we had a decline. So we took out our long position. That was a winning trade, and the other one we had open on the stock markets was the Dow. Sorry, the Dow was here, and we'd had we had a half a position trade, and then we'd taken a full position trade on the 19th here at what was it, 41,009 something, wasn't it? We got in earlier, earlier in the on the 17th, hadn't we? The 17th or the 19th? That was 17th, 19th. I can't remember the exact date, but that had been taken out as well. We had a similar move here or yesterday on Tuesday, not yesterday, where it took out our elevated stop loss. So another nice winner there on the Dow. So interestingly, though, the stock markets today in the US have at least have actually. This is the futures market, obviously the derivatives futures market. So we're, as you see, we had a shakeout panic yesterday. We're sort of back up again today. So yesterday, the actual stock market, the Dow was only down 0.6%. The Nasdaq lost a whole massive 2% as the tech stocks took a big of a hammering yesterday, and the S&P 500 was down 1.12% or 64 points at 5712. There's been some notes overnight or early morning in the US from some big banks, some Wall Street analysts downgrading end of year expectations. Barclays was their leading US equity analyst has just been on Bloomberg in the last hour or so, explaining their downgrade for the end of year target for the S&P 500. They've reduced it to 5,900 from what was expected to be 6,600 was their target for the year end for the S&P 500. So we're currently trading at 5,700 here towards the end of the first quarter. And that's quite a significant decline. It's a 10% cut. Remember, typical years, stock markets, S&P typically accrues at least 8 and a bit % over the long history of the S&P. So the Barclays argument was very much, the exceptionalism that has driven the tech stocks over the last 2 years or so. The big tech 7 have really bolstered the stock market returns over the last 2 and a bit years. It's started to cool. Their forward earnings expectations have come down quite significantly. There were like a year ago, there were 35 times earnings. Now with the down to expectations and out, that's still very high at 24, 25 times earnings. But again, the long-term average on the S&P is around about 18, 16, 17, 18, something like that. So the tech earnings are at the top end. Obviously, companies like NVIDIA have had such a stellar run, but we're now seeing some of that profit and expectations being cooled down. So there could be impact on earnings, and then driven by the uncertainty of the tariffs, what's actually going to come out of all of this, and what's going to be the actual economic impact of it all. Remember last time it wasn't as significant as Trump was trailing and people were expecting at the time in 2018, 2019. 2019 we had a turnaround, but this time the numbers are so much bigger. That's why markets are panicking a bit more, and we've had this sort of, if we just look at the daily time frame here on the stock markets, we've had this sort of collapse in confidence during the second half of March, but we have sort of rallied a wee bit, and then we rolled off it over yesterday, having got to the 20-day moving average for the first time. So that was a big weak day yesterday for the S&P, and I said so far today it's bounced a wee bit. But as far as round numbers are concerned, we're obviously here just hanging on to the 5,700 level. We haven't been able to hold the break of the 20-day moving average. Where we were back here, the all-time highs up here at the end of February. So huge sort of 8-9% decline in the S&P 500 into contraction. So we bounced away from that. Where would we go from here? Obviously, there's a bit of rounding up because we're at the end of the quarter, the end of the month. But yeah, let's see what actually happens on the 2nd of April, what actually comes into force, how much negotiation is being done behind closed doors. Again, only time will tell. So yeah, stock market's a bit weaker or significantly weaker yesterday. And that's across the board. Just finally, in Asia, it's no different. The Nikkei, similar pattern. Down here, the second half of first half of March, recovering a bit in this sort of latter week, final week, and again, sort of in a bit of a consolidation zone for the Nikkei in Japan, and in the UK, the FTSE 8,600 couldn't get and hold the 8,700 level last week, and we've drifted down low this week. Yesterday's, as we said at the video yesterday, nothing of any surprise out of the spring statement from the Chancellor of the Exchequer in the United Kingdom, the Finance Minister. Sterling weakened and then came back a bit, but you saw yesterday, you see the inconsequential sort of day as far as the FTSE was concerned yesterday. A very small, I should say, doji candle. Not sure what was happening, and the consequence today has been really the fallout overnight about Trump's tariffs. It's meant that the FTSE's opened lower, and currently is at it's just above its lows of the day, rather than anything the UK government was saying yesterday regarding the economy. But I mean, significantly see that we're under the 50-day moving average here again, as well as the 20-day moving average on the FTSE side of things. So perhaps more weakness to come for in UK stock markets if we get below the 8,600 floor there, and then next level would be that level there, 8,500, and then into this 300 level, 8,300 level if we break to the downside. Let's have a look. What else is going on? Crypto, Bitcoin continues to hold up. We went to have a go at 89,000 this week, didn't we? We've seen that earlier in the week on Tuesday. We couldn't quite get there. Similarly on Monday, it looked like a big strong break of the 20-day moving average on Monday. Since then, we've drifted lower as the dollar's sort of picked up a bit of pace. So crypto still holding the 20-day moving average. So still, not mildly, but relatively positive. It's broken out of this triangle area we put on from the down trend we'd seen from the top up here at 109,000. So we've broken out of that. How long we can continue that, we shall see. 20 days now sits at 85,973. Test of this trend line, another break to the down line, then there's a lower trend line here to test around about here, this blue dotted line here from the floor back in the middle of March. So and to the upside, the 50-day moving average, you said yesterday, 89,500, and then the key 92,000 channel level that we'd had for a lot of the start of the year as we came up 100,000. So Bitcoin relatively biased to the upside. Oil markets continue to hold up. Really, the dollar, US oil, I should say, not dollar oil, had a good day yesterday. Hit into this hugely psychological $70 a barrel level, and it's just stalled there. We're at 69.88 at the moment. But again, it's still holding up. It's over the 20-day break we had here on the 20th, so we're into our 1, 2, 3, 4, 5, 6, 7-day rally. But a break of $70 is proving difficult yesterday and so far today. So if we do get through this to the upside, we've got the 50-day moving average coming to meet us around about 70, 60, 70, 50. So there's quite a thick wall to get through to continue this upside rally. Support on the 20-day sits at 68.74 at the moment, but oil relatively well bid as the world markets. So we had that big surprise in inventories yesterday as well. The majors, I said dollar stopped holding sway today. So the Aussie 63. 12. Actually, let's go back to the hourly charts for the majors. The Aussies come back and retaken the .63 level, but it's not with any particular direction, isn't it? We had the morning down, next hour was up, down, up, down, up. So it's running out of steam a wee bit. This move higher. But on an intraday basis, we've got support at 63.05. Obviously, the big 63 is down here for the Aussie, but relatively biased to the upside, but doesn't want to move much above 63.15. So there's a tight little 15 pip channel that may or may not break for the Aussie. Canadian dollar under 143, or dollar under 143, and again, as we've said all week really, we got to the daily time frame. We are in a very much sort of channel bound situation, just dropping out the bottom of the 143 level on Tuesday and yesterday, and we're back to it today. So it's not, again, nothing to get too excited about. There's not much direction there. We're sort of just sliding around in a sort of channel area. Obviously, the whole political fireworks that's flying around the relations between the loonie and the US dollar continues. So on today, it's dollar's a bit weaker again. The US dollar is a bit stronger against the Canadian dollar from the lows this morning in the European trade, but it didn't want, like yesterday, it didn't want to break and hold 143. It didn't want to do that again in early European trades, and we're back down 142.89 at the moment. So again, not a great deal of action and not a great deal of reaction to the US data, although it was just sure the 5 minutes would be relatively, but there we are. That's the immediate reaction was down, and we bought it all the way back. So here we are, some 20 minutes after the data, and we're back to where we were basically, aren't we? So sort of bias a wee bit to the upside for dollar CAD. Swissy, we still got a position on the Swissy. If I just open up, it's really not going anywhere. But this morning, again, have a look at the Discord group, guys. We moved the stop loss up to entry now, so we might be getting taken out actually flat on that. No, it's still, that's not quite the case. I mean, it was here we went in long on the 21st. It hasn't really gone anywhere. It looked like we were going to make some action yesterday. It didn't happen. So to be honest, I just got bored with it, and I've just moved it up here. And that looks like that might be getting stopped out for flat. We just haven't been able to break the 20-day moving average. As I say, I was fairly bullish about this, given that we've got these this sort of parallel setup here on the daily time frames with our trend lines here. Perhaps we might need another sideways action here before we break either up or down. I don't really care as long as it goes in some direction. But at the moment, we're still biased to the downside under the 20-day moving average. And we looked like we were going to have a go at it on our system trigger to go along. But yeah, so that's a current open trade, which might, let's have a quick look on this. This is obviously my actual trading platform's a little bit, the actual pips themselves are a little bit different. But there we are. You can see that that's the stop loss is supposed to be at the entry, but it's actually just a little bit below that. But yeah, we're still in that. So we'll see if we get stopped out on that later on, or we again move away from it and move to the upside. So that's an open position. Dollar yen, again, here you can see over the last couple of days we've managed to hang on to the 150 level, but we're just sort of meandering around it. Of interest this morning has been that we've pushed to a new high for the week at one, and it took us over 151. So the next big round number. So we are sort of, again, a bit more, as you can see this looping move here in the 1 hourly chart. We are sort of biasing to the upside, although we've come down in the current hour. So that's a move higher and then a bounce from the 151 area. If I just put the 151 area in there, you can see what's happened this morning. And again, there's not a lot of chatter moving this. Obviously, the imports of car parts and cars, the 25% tariff, obviously that has a significant impact on Japanese exports, manufacturing exports. The Japanese manufacturers obviously build in the US as well as export from Japan as well. So obviously Toyota, Mazda and others have been hit quite significantly in the Nikkei trades this morning. So as far as dollar CAD's concerned here, we're still, again, another one that's sort of not moving significantly, but biased to the upside. That would have been long this morning from early European trades at 7 o'clock candle. And it's taking you from about 150.50 to 151 and turned down. So if you grab that 50 pips, well on you. If not, you've got at least 20 pips currently if it's going to take you out as it gets back to this 9-period movement. It might hold, it might move back up to the upside. Time will tell. Kiwi, another one that we've got a live position on. If I just go up to the daily time frame again. This is again another one that's meandering nowhere, but we're out of the money this time. We were looking for this to go. We were short here, so a bit like the Swissy. It hasn't actually gone anywhere. It sort of meandered around our entry basically. But again, this one's out of the money. Stop losses here. First target was down here at 56.87 for, I don't know what we want, 56, 50 pips we were looking for. Again, it might be one that's a bit boring. It's not happening. It's flat on the moving average. Again, it might it's not going anyway, so it's not. It may turn down, but it's been going 1, 2, 3, 4th day today, and it's gone against us on this 4th hour. Maybe closing it out later on today. But watch the Discord channel, guys. Discord is here. And the group you want, that's a general chat where everybody interacts. The trades that I put on, the signals are here under the trading strategies. These are the ones we're talking about. These are the ones that are open at the moment. There's 4 still left. This is an update from this morning. And there's the Swissy and the Kiwi we've just been talking about on the chart here. So Kiwi not going very far. Euro 107.88. And again, this is the daily again. The downtrend has continued, although currently today we are having a up day, having broken the 108 this week, and a consecutive 1, 2, 3, 4, 5, 6 consecutive days to the downside. We ran all the way to one of my favorite indicators, as you know, the 21 exponential moving average, and we've bounced off that so far today. So we're again a bit of a positive day for the euro, having reached a key target level down here at 107.57, where the 21 EMA sits. If we look at the hourly chart, that's that 107.36 low we've seen today, and we're moving higher very much against the trend. So can we hold this break of the 50 period here? It's for 1 hour. And our second hour, last time we did it, we were over it for 1, 2, 3, 4, 4. 1, 2, 3, 4, and then we then continued the higher time frame trend to the downside. So I'll see what happens here. Interesting, is quite a rejection wick here at the 108 level. So clearly no one wants to buy this, particularly at 108, and so we're a wee bit weak, although we are moving to the upside. 107.86. Let's have a look if we can move back into that 108 zone. But as you can see here on the hourly chart, you can see a bit of a resistance area now, which was a previous support area earlier in the week on the 24th, the 25th, and yesterday. So the last 3 days, this area we're at now, 107.85, has been a support area as we've been moving lower. It's now clearly a resistance area to moving back up, if indeed this was our low, 107.35, because we've actually reached a target area for many technical traders at the 20-day moving average, or 21 EMA as well. So that's hence the bounce. But to take this higher, we'd like to be back over the 108 area, and you'd like to see a rising with a bit more oomph. There's the hourly sort of looped down, and it's looped back up and a bit more direction to the upside. But there's not a lot of data left today to drive that. The main data's coming, and as you can see, it's not really moved the market particularly. Again, basically, expected on some more stuff out of Washington. So it's really the Washington time scale of the time trading data, the president's utterances is really what's dictating markets currently at the moment, until there's some clarity formed about what's actually going to happen. And really, it's going to probably be like that until next Tuesday and Wednesday. We've also got the impact of the month end and the weekend. We've also got the key PCE data on Friday as well, which is tomorrow, which is obviously, so a bit of meandering perhaps for the rest of today and tomorrow, unless there's some more headline grabbing notes coming out of the White House. So euro 107.85 at the moment, sterling 129.45. A bit of a spike on the data at 12:30. It's 5-minute chart, and it's come back down. That's why it looked a bit odd. So actually weaker dollar on the data. So sterling looking a little bit different to euro. If we look at the chart, so big divergence between the euro and the way the euro dollar and the sterling dollar is performing at the moment. So the sterling also into its 20-day moving average, less of a move because it's been bid much more than the euro, but didn't want to hold 130 last week, but doesn't want to go down under 128.50, which is where our 20-day moving average sits at the moment. So again, similar to yesterday, down and into test, although it didn't actually test it yet. So perhaps we did that today at the 128.70 zone, and then bounced off that. So but again, it's a weak move up today at the moment. See, so it's a flattening at the top, 150 pip range from the 130 to the 128.50 or 128.70, 130 distance range, which isn't that far for cable moves. So sideways action, and obviously we've got weekend, as I said, and then the tariff talk next week, and then obviously we're into the new month. We got non-farm payrolls on Friday, but really it's all about the tariff chatter on Tuesday and Wednesday. So dollar mixed bag, really. Indices we've had a look at, and gold is the main beneficiary today of the uncertainty, the continuing uncertainty regarding the tariffs. We didn't react yesterday, interestingly. If we just go to the 4-hour chart, didn't really react yesterday to the announcement overnight. This was this is the 4-hour. This is the 4-hour candle. So it's it sort of bid into the Asian session as the stocks have weakened, and the automakers were hit quite significantly. So we've had a strong rally over the last 12 hours for gold back to the $3,050 an ounce range, and within a smidge of all-time highs again earlier this morning. But the hourly charts, I think I put it up on again. I put that up on Discord today. It's a nice old run, but yeah, it doesn't want to poke a new all-time high today at the moment, and it's been down since 11 o'clock. Gold market, but it's had a good day so far. It's a nice run for intraday traders. So gold bid, there you can see it's coming out of its overbought area there on RSI, although MACD and the signal and the signal line, the MACD line, still nicely rising. The histograms have turned a light green from a positive green, but still positive. Maybe see if that holds. Would take you out of this long position if we went back to 30.42 on this particular strategy for gold. So that's where we are. What else have we got? We got an Aussie. Let's have a look at the other open positions we've got at the moment. We've got we've only got 4 open positions last night. I missed taking some trades last night. There's a big short on DAX, which I didn't take, but anyway. Aussie, Swiss, and Euro Oz are the only other 2 positions we have currently open. So let's have a look at those. Aussie, Swiss. We did have a lot at the moment. I was managing them. Got a bit. There was like 15 at one point. It's a bit on the high, towards the high side. It's what hour time frame? That was yesterday, wasn't it? We hit target. Was that this morning? We've hit target on that one. Aussie Swiss. Yeah, I think I'll put. Yeah, that's another one that hit target this morning. Oh yeah. And again, basically I'd already hit target yesterday. I thought it had here. So this hit first target yesterday. We got in on the 25th. And we're going to be back to target again, or the first target again this morning, and that's meant I've pulled the stop loss up to entry again. So there's still half a position open on that one, but a bit like the Kiwi and the Swissy, the 20-day moving average is proving a resistance area. As you can see, it's generally in a downtrend, this particular pair. But it's bounced quite nicely. So we've got half a position still open. And again, if it recalls to entry, the stop loss will trigger and we'll be out, and that position will be closed. Half a winning trade, if you like. But we'll see. As it's still positive, let's see if it has another go. But again, I might close it out later on. Today, Euro Oz was the other one. Euro Oz has been good to us. We've got a few trades going on this one, and again, it's in a similar position. This is a short. This one from the 25th. Target was hit yesterday, and again, it's going back this time into the 21 EMA, and we're in the money on this one. There's a stop loss again. If I just go to the time here. I pulled the stop loss down here to the entry, so it's ran to target again today, and it's going back again at the moment. But here on the hourly chart, that 50-hour moving average might hold, and we might have another leap down. But as you can see, we want to triple bottom here on the hourly chart at our target. So a break over there, when we might be back to us, take us out the stop loss and this short-term downtrend, which is what we were capturing over the last couple of days. Maybe over, but we'll see what happens later on today. So Aussie, Swiss is still open. Euro Oz, which is this one here, is still open. Dollar Swiss and Kiwi dollar are the 4 current open trades at the moment. Guys, if anybody's got any questions, please don't be afraid to ask. Don't be shy. Remember to follow us on Discord. It's where I put all the end of day trades, both the standard ones and the more aggressive ones. If you want me to start putting on, did I not post that? I didn't post that anyway. we want some shorter time frames, some 4-hour trades or some scalping situations, just let me know, and we'll do that as well. This time of the day, just ahead of the US Open, I would be looking at, if I was looking to try, I like to do the DAX and the Dow particularly the Dow on a index basis, particularly DAX actually on a index basis. But so we could be playing with that on a short term scenario. That's a high term. So we even on a 5 and 2 minute time frame, these approaches, these strategies are still as relevant. You just obviously got your stop losses are closer, your targets are closer. You're just chopping about, and as you can see here, there's no real direction here on this 5 minute on the Dow there. Interesting, our T1 zone has been hit twice, so there's some validity for this area. It's not there for that 42, 44, 50 zone. So sort of here, short-term basis, Dow's sort of biased to the downside as the rumblings from what Wall Street is thinking about downgrading end of year targets rumbles through. So as ever, new guys, existing traders, if you've got an account, do follow us. If you're looking to join us, have a go. It's a prop trading, and with us, the proptrade.com, it's a good way to get in, to test your strategies, test your emotions. Doesn't cost very much, and it gives you the ability to leverage bigger accounts. $25,000 account is a good size forex account. 50,000 50,000 is a nice size as well. But that's $350. You can start with 10,000 for $85, and there's always some coupons available at the moment. I've got the standard. Let's say it starts from 55. But if you wanted to buy a challenge, it's going to take me coupon codes. Ask us, they're available. SC25 gives you a 25% discount on any of the across the board. So the $5,000 starts from 55. That brings it down to less than $40. But if you want to do this properly, find yourself a few $100s. 50,000 big account. 25,000 perhaps a bit more manageable. Means you can than the amount $150 get you going with a 25% discount, and then you've got a significant account size to take multiple trades on perhaps things you might not, or lots of different assets. But gives you the ability, gives you the leverage, a margin to look at different things, try different things out, have an end of day strategy, have a 4-hour strategy, have a scalping strategy. Find what works for you. You use indicators, don't use indicators, use a whole price action analysis, trend following strategy, a mean reverting type strategy if you're using short-term approaches. But whatever it is, give it a try and see. You'll find one that sort of fits your personality, fits your approach to trading. Trading isn't for everyone, but the flip side is that anybody can do this. It's not an intelligence thing. It's an emotional intelligence. It's controlling your emotions, accepting that you lose. You have a lot of losing positions, but if you keep the risk small, you can end up. The world is your oyster. There's absolutely no limit to that. And again, the rules of prop trading companies, and particularly here at proptrade.com, they're set, they're clear, they're transparent. But there's nothing hidden in this. I know there's a lot of flack flying around about some prop trades companies have far too much small print, but ours is very, very clear. It's very open. We've got nothing to hide. We're real human beings in run a real business, and we've been around a long time. So we're here to help you guys. And these targets and levels, these are good for you. You don't want to be losing more than 5 or 10% of your account. you've got to accept losing, but keep the losses small. And then, the target, the 8% target or 5% target, if you're doing 1 and 2 step challenge, it's very, very attainable. And then you can move on to, using a funded account. You pass the challenge, you get what you've paid for your fund, your challenge back. And then when you start making profit, 80%, 90% of it is yours or can be yours. So give it a go. I'm here to help you. We're all here to help you. And anything we can do to make your trading life better, please let us know. And the best place to do that is through our Discord channels here. So come and join us, my friends, or contact us directly via our website. So that's all for today. Tomorrow is it's PCE day. Tomorrow, as you can see here on in the Forex Factory calendar, big high impact event. Tomorrow is the what's it called? Corporate here is. I can see if you're looking at it. Same time tomorrow. I'll be here at 12:30 London time, GMT. The core PCE price index for the United States. So remember, it's the Fed's preferred measure of price inflation. It's very key. And these personal income statements and the consumer price index, personal spending and income numbers are important as well. So join us tomorrow for that. Remember, the weekend, the clocks go forward in Europe. So the time will change in London. The difference between London and North America disappears as well. So what is typically 1:30, what is now 12:30 data releases goes back to their normal 1:30 time for the summertime. As far as GMT is concerned, I'll still be broadcasting. I'll decide whether we're going to do it GMT or London times or server times from next week. Okay, so take care. See you tomorrow for PCE. And as I say, as ever, may the pips be with you all. All the best. Bye-bye.